into today's trading idea, we have three. Let's start the first one. Will be focus point. So focus point, we have a insti buy and one of our top pick as well. What I want to highlight the stock because the stock has created some sort of major support within at 69 cent region. If you look from the low of November 2022 all the way to the high of last year at March, we can create a solid base of the Fibonacci level at 61.8, which is sit at 69 cent region. So those level, if you can tell, they have been testing as number of time, at least 1, 2, 3, I think more than 5, 6 times for the past 12 months. So this actually pretty much has built quite a stronger baseline for the stock. So recent retesting of the support that we mentioned earlier has been quite meaningful after the stock is actually staged something that we call a bullish divergence, a new high-low structure of RSI, but a new lower low structure for price. So that is indicating a reversal move. So the reversal move has been validated following a subsequent recovery as the stock has created a new high-low structure, break above the 200-day moving average and the long-term downtrend line. So as per yesterday gain, was backed by higher trading volume. This is pretty much a kickstart of the new upcycle for the stock. So if you look the technical reading for both RSI, it also surged past above the long-term average line and now continue to create a strong uptick in tandem with positive reading in MACD. MACD also has traded inside the above the zero level. So that means the stock is pretty much has just restart the new uptrend movement. So we're expecting the next upside target at 84.5 cent and 96.5 cent with the cut loss level below 69 cents. So in terms of risk to reward ratio, it was quite interesting because we are risking about we are risking about 9.8% downside risk with the potential reward over 26%. So risk to reward ratio is about 1 to 2.67. For quant style, we are looking from the value side perspective, since the stock is building up so much what we call that support for the past few months, and the quant score value will be at 7.00. Alright, now moving into the second stock of the day will be MHB, Malaysian Marine and Heavy Engineering. So one of the reasons why we highlight the stock, because again, it is actually quite similar pattern with what we've seen on focus point. The stock has been testing number of the major support right within 45 cent number of time, at least in this case about 3 times. And we are seeing much more stronger reversal move, particularly as we see new higher structure for the past few weeks. So in terms of risk, so yesterday again was backed by high trading volume. RSI also turned much more positive. MACD definitely on the positive side. So we're expecting the new upcycle to continue unfolding. So a risk to reward ratio, despite higher risk at 10% downside risk, we are looking for 25% upside potential. So risk to reward ratio quite decent at 1 to 2.5, while the quant scoring will be at value at 5.8, slightly below compared to the focus point holding just now. The immediate resistance at 55 cent and 62.5 cent, while the cut loss will be below 45 cent. Last but not least will be Hibiscus. Hibiscus is the stock in our view has been considered much more lagged compared the most of the oil and gas stock. So but regardless, we did highlight the stock on 10 January. It gained about 7.4%, hit our first target at least twice before station pullback. The pullback was pretty much kept within the 50 and 200-day moving average as the stock continued to form a new high-low structure since our recommendation earlier. So yesterday again, on a back of high trading volume, indicate that the stock still have more room for further upside as we actually reiterate our technical buy with the new high and higher target, while we also revising the stop loss higher to 2 ringgit 50 cent. So the next technical target will be at 2 ringgit 2 ringgit 84 cent and 2 ringgit 3 cent, while the risk to ratio quite attractive with downside risk of 6.2% and upside target at 13.9%. So while I think the quant scoring would be at a value it will be quite high at 8.00.
Do 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 do.